Good morning, everyone. Welcome to our Friday morning trading room. Alrighty, here we go. Yesterday, well, let's take an overview here. The daily chart for the NASDAQ. I think it's important that you kind of keep a daily perspective or a longer term perspective. You can use a larger mean Renko bar if you like. Daily charts are just fine as well, or hourly charts. Just something to kind of give you, like I said, an overview of where the market's been, where it might be going. And what's kind of jumping out at me when I take a look at this is this tight little sideways trading range that we have going on. It's not quite a pendant, but it's almost beginning to resemble a bear flag, a long overdue bear flag. Last couple of days were both bullish, and that bodes well for the buyers. However, as we get closer to some of these resistance areas, um, even up here to around 7,000, it looks like we've got a whole lot of activity around 7,000 zone. I would not be surprised to see the sellers step up and knock the market back down. Volume was good for the last couple of days. Yesterday's volume a little bit higher than the day before, and yet the bar, relatively speaking, maybe a little bit smaller. So you don't like to see volume out of sync with the bar. And what I mean by that is big bars should have big volume, small bars should have small volume. But that is just an overview. We still need to trade what's going on the charts. And you can see here from most of the overnight, except for what came earlier, a rather quick decline at the beginning of the Asian session. Most of the overnight was relatively sideways. Some big swings, but sideways all the same. Fridays are or can be a little bit odd. By that I mean it's not unusual to see Fridays just kind of go sideways. I forget who it is here in the room who has made a habit out of not trading Fridays, and by journaling their trades, they actually saved themselves some money. They found out that Friday was their worst trading day, and just by avoiding trading Fridays, they stopped losing some money on the week. Yeah, and then there's Scott. Scott, who says Friday is a go long day. And there may be something to that. I get the psychology of it. You want to finish the week on a bullish note. I get it. Yeah, Scott says, I think it's just slightly better than 50% for the longs on Friday, and that's good enough for me. And the way he described his slightly better than 50%, it's 50.00000001% in favor of the buyers. Well, we're certainly getting a little bit of a bullish push right now. And the trend on the week is bullish, so there is something to be said for that. Here, the Raptor just had a nice little follow through off a number one signal, as did the Falcon with a trend change signal. And your Hawk with a first micro macro cross. The Eagle with a not so easy to spot rule of three signal. You can see it in hindsight, but as it's printing, I don't think I would have got on board that one. Rather, I would have held out for one of the other signals. Okay, well, the bullish rally starting to lose its grip a little, getting a little bit of a pullback here. A little bit of a hard edge bounce. It's a little premature. We're not to the hard edge yet here on the Raptor. That's the first hard edge. The Falcon actually kind of waffling here a little bit, as is the Hawk. We're got a bunch of yellow bars cropping up. It's still very early. We're only 10 minutes into the day. Darn it, if I had only listened to Scott. Look at that move. That's a pretty decent rally to start the day. Oh, well, you're welcome, Paul. Paul says, I've learned how to become a patient listener, a patient trader listening to you. Thanks for that. Have I lulled you into submission? If my wife has trouble sleeping, she says, hey, Eric, just talk to me. Of course, usually I talk trading or something. You know what happened in the markets today? Next thing you know, she's sound asleep. Well, we are getting some follow-up signals here, and I'm debating trying to get on board, but it's the stop placement that's kind of holding me back. You know, my stop would have to go way back here. I've heard that before from people. Scott says it's the smooth jazz station radio voice. Years ago, my wife used to have a little business. We would rent ski accommodations. We had a property rental pool at the local ski resort. And, people would put their condos and houses into the rental pool, and we would rent them when the owners weren't using them. And I had more than a few people give me that comment on the telephone. You should be on the radio, which was very nice. Well, I don't want the market to run so far that I can't get on board, but I guess better to miss a move than to get stuck on the wrong side. It looks like Mark picked up a late filter entry, and it looks like our chart's still out of sync here a little bit. His came right through here. My chart changing a little bit on the trend line. Let me just see. I haven't had a chance to check my emails whether Ben has gotten back to me yet. What I'm doing here is just checking my emails. Ben asked me to check the price chart, whether the prices on the chart were congruent with the bid and ask. I'm not quite sure how he expects me to watch both at the same time. They do seem to be in sync. Nice little hard edge bounce, by the way. Now that we're kind of retesting the highs, I know the market has moved a long ways away, but here is a decent second push opportunity. What time is it? Oh, it's right at the quarter to the hour mark. my least favorite time of the day to trade. All right, let's see if they give it to me. I'm going to pull my exit order here a little bit. Back here to the hard edge. And what I'm looking at is just a second push opportunity off this number 3 signal, hoping that the buyers continue to press the market. But right now, they're floundering. Oh, come on. Give me that little bit of a rally. It's encouraging to see a couple of bull bars here, because that means my swing now, or my stop now, is 2 swings back. But I am against the ATR, which is not desirable. Yeah, there they go. They're not going to give it to me. I'm pretty sure I'm going to get tagged at this point, but we'll see. Yep. Got tagged all right. You know, I think part of that was the fact that it's quarter to the hour. For whatever reason, the market likes to toss you a bit of a head fake at that time. All right, so I dug myself a little bit of a hole here to start the day. A deeper stop, of course, would have held me in a little bit longer, but it's just not worth the effort. Well, that's a very big reset here for the Bears now. Definitely putting a little bit of a bearish spin on the morning. And Mark, yes, I did get your email regarding the differences in the Falcon signals, and I have sent it on to Ben. Sorry about that, folks. What I was saying is we have the number one signal now on the Falcon to short, and that's fine. But I'm not convinced yet that the market is ready to head lower, given where we are relative to the Eagle. Like, where have we gone? We're still within this sideways, the larger sideways trading range. And certainly there's opportunities there. But I think given the overall range, given that the market has gone higher and now it's gone lower, it's more prudent to enter on a second push opportunity. The Hawk now getting a little bit more bullish, actually producing a number one Eric, it's been a long week. What can I say? A first micro macro cross on the Hawk is getting printed. The Falcon working a possible trend change signal. The trend line has flipped, but we don't have the signal just yet. I'm open to shorting, but only if the market gets below here, below that swing. Likewise, I'm open to buying if I can get another bearish bar. I'll have a second push. Okay, there we go. So now we have a second push here on the number 2 and a second push on the number 1. And you know what? It may be easier just to bracket this trade like an OCO and buy above here and short below here. See, here we come now with the number 3 signal. So, I don't know. The market in a bit of a twist. We're not quite out of opening range yet. All right, so we are short. I'm going to throw a profit order down here just so I have one. I'm going to use my other order as my stop loss. And look at that. Now they're holding here at the 68.80. Okay, a little glimmer of hope now that we've had the breakout. Come on, don't pull back too far, yes, stinkers. So again, I'm just going to be looking for evidence now that the market is going to start heading in my direction. What was that? Oh, man. All right. That was obviously we're waiting on some sort of report this morning that had a little bit of a kick to it. Let's take a look here. Oh, it's no, the non-farm payroll came out early. Oh, the manufacturing report shouldn't have had that kind of pushback, but it did, or something did. Yeah, a Trump tweet, Mark says. Very likely. Well, that was rude. All right, let's put that away. Oh, look at that. Just enough of a swing to tag you out. And then they reverse again. All right. Well, let's see whether they've got what it takes to keep this market heading lower. It's still very, very sideways here this morning, and that's part of the problem. As the market starts to reinforce this trading range, it will be a little bit easier to trade. This is part of the reason I like to wait, at least for opening range to expire, so I can see where the market's been, if there's any kind of bias to it. When and if we get a breakout of here today, like I said, it will make trading a little bit easier. Otherwise, the rest of the time, we're just going to keep bouncing back and forth. Looks as though we may get well, we're certainly getting a bullish rally at this point. Whether we're going to get a bullish break, all right, there we go. There's the bull break. And a pretty convincing one at that. Ideally, I would like to see two bear bars now so I can kind of know the limit, because what we're looking for now is we've got the breakout, we're looking for the retest, we're looking for another opportunity to get long. Yeah, the Falcon and the Raptor both producing #1 signals. Oh, wow. Oh, I hate it when they do that. Oh, look at that. That's brutal. Well, here now, the huge retest. Brutal. This is why people trade breakouts, because of missed moves like that. Now, I did have a chance to get in off of this bar right here. I was holding out for a little bit more confirmation, and, well, it caught me waiting a little bit too long. There's nothing I can do about that. All right, if you were so inclined, you could now throw your just in case order to buy up here. We're at the top end of the very, 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 very large overnight trading range. And we're very likely to see the market retest all the way down here. So if I get a little bit of a bullish reaction, I can actually bracket this trade as well in anticipation of the market coming down here to retest the lows. It's a lot riskier, but, well, the way my day's been going, why not? We'll see if we get a short signal. Looks like the Falcon may give us a short. All right, that's probably all I'm going to get right there. So I'm going to throw a sell order between or below the lows here now. And what I'm looking for is I'm looking for a retest of this zone right here. And I can put my profit order down here. And what's going to happen on the Raptors, we're going to produce a number 2 signal if the market continues lower. And you can see where my profit target is also very close to the hard edge. Gee, imagine that. Oh, all right. Okay, so we've got the fill now on the buy. And I'm looking for a little follow through. Yes, dinkers. Have they got my number here today? I'm reaching a little bit here on my profit objective, trying to see if the market's going to move 2 zones. This here being zone 1 above the primary resistance. This now is zone 2. My stops actually should be a little bit deeper. I'm going to put them right here below the primary resistance line. Oh, well done, Mark. Mark says I've been in a buy from 68.83 way back here. And stayed with it, picked up 30 points on 4 cars. I'm done. Well done. Mark, you may just want to check your comment window. I passed along a little message for you there. Yeah, rub it in, why don't you, Scott? Scott says, long on Friday. Go ahead, type it. Say, I told you so. Go ahead. That's the best way to trade. I like Mark's comment here. I've done this before, and Adam could never wrap his head around it. Mark says, I put my target at the high and took a big stop to get a fresh cup of coffee, came back, and pow. Yeah, I remember Adam likes to share a story of one time we were trading in a trading room, and I did the same thing. The dog was bugging me. She needed to go out really bad. And I was in a trade, so I set my profit order, I set my stop, and I took the dog for a walk. Adam said, "You're doing what?" I said, "I'll be back in 20 minutes." He could not wrap his head around that. But, that's you got to do what you got to do when you have your trade set up. Um, there's not much that you can do about it now, right? You're just going to, it's either going to work out or it's not. Oh, well, thanks for not rubbing it in, Scott. Scott says rubbing it in would be my Russell buy at 1469. I take it from that the Russell has made a very nice move higher off of 1469. The Russell's another good market to watch. I've expressed before my personal preference is the NASDAQ. A lot of people gravitate toward the E-mini S&P. They think that they'll make more money at the higher tick value, but that's not necessarily true. What you will find is if you compare market swings dollar for dollar, this market swing, if that's a $400 swing, the E-mini S&P will also produce a $400 move. So the NASDAQ has certain advantages at $5 a tick. It usually enables you to keep a wider stop at the lower tick value. The Russell is $10 a tick, so it's borderline. Some trades will be a little more affordable, some less. But even with the Russell, I think you'll find that dollar for dollar or move for move, you'll be dollar for dollar. And here we go again with the sideways nonsense. Not getting a whole lot of love from the market here this morning. Okay, we're going to roll my stops now. I'm going to be 2 swings back. If the market fails to take out this high, well, then it's going to head lower again. I may as well take my stop out a little bit earlier. I'm doing my best to stay outside of the current ranges. Oh, way to go. Scott says yes, the Russell trade touched my buy and that huge jump happened like a 4-second trade. Who knows? Well, that's true. Who knows? The Russell, so now we know why the market jumped so high. The market engaged Scott's order. Scott trading his 1,000 contracts in the Russell swung the market higher. Come on, take out that high. There we go. All right. I will roll my stops now to break even, plus 2 ticks. Actually, I got 4 there, but who's counting? It's not much of a breakout, really, and I got my fingers crossed, and we're going to get above here. Shoot, secondary resistance zone is holding them down. Well, made a little progress, but not much. See, now we're kind of getting this top forming again. And when I'm watching the market thinking, okay, are we forming a top? I'm looking for that test of the extreme. I'm looking for that test of the extreme. The Raptor will actually produce a number 2 signal. The Hawk may produce a red bar buy that fails. So you could actually short below this red bar buy signal. You could sell right down here around 69.15 and change. I'm thinking retest here of 6,900. But honestly, the market is so back and forth right now. Okay, you're now actually a number 3 signal. With yet another second push. Come on. So I've taken my 3 trades here today already, but because I'm in the red overall, I'm going to try to take a 4th trade. So if I were trading my 3 trade quota, I would have met my quota on the day. And I'm just looking for a second push opportunity now off of this number 3 signal. So I've got my 3 trade quota, but I'm not profitable yet. The idea is you want to trade your quota, but you also want to finish the day with a profit. Okay, here is now my second push opportunity. I'm going to look to buy on a move above that bar. If they give it to me. This can quickly turn into a number 2 signal, by the way. They're hovering. Wow, they're brutal here this morning. Not really giving us a clear indication one way or the other. Okay, are you gonna go? Wow. All right, there they are again. Things getting really, really slow. And constipated. My goodness, they're stuck here around this median line. They haven't really budged off of that for, well, going on 10 minutes now. All right. There now is my order to buy above here. I'm going to make a note of my stop. I'm going to actually pull it away. Well, I'm wondering whether it's going to turn here too, Scott. Scott says his Feagle, that's his Falcon Eagle combo, says the market should turn, but he still likes the market long on Friday. We're going to get a number 2 signal here. And that may be shortable. Okay, we'll see if they go up here now, and if they fail and come back with a sell. Oh, see, there they go. There's that number 2 signal. In the making. We don't have a really good retest of the high just yet. Let me get this well out of the way because of that. I don't like to see the market make those quick moves. That tells me that there's maybe a lack of volume, a lack of trading going on. Okay, I'm going to close this out now before something silly happens. Yeah, Scott says the ultimate support and resistance lines are those off of price, volume, a combination. They actually look back in the charts and they analyze price mostly, and then they predict where the support and resistance is likely to lie based on what price has been doing. Yes, Scott. Scott asked, so they're structure based, and they're fairly, they're fairly consistent. So what I mean by that is, here's your median line. You can see the spacing here to the bullish side is the same as the spacing here to the bearish side. So the markets do have a tendency to repeat themselves. It's just, is the market going to be bullish or bearish? uh, Scott, I'm getting some comments here about your Fiegel. So you're going to have to send us a picture. Mark says there's no proof without pictures. What's a Fiegel? Mark says. Yikes, did something mutate during a backup? What does it look like? So send me a screenshot and Scott says just load an eagle and a falcon on the same chart. Okay, here we go. As you can see, I'm still waiting for a possible move here lower. Does that look right, Scott? Is that what you got? Well, that's very interesting. I like it. Yeah, Mark's curious as to the bar size you're using. I guess it would default to the Eagle bar size. So there you go, the Fiegel. Oh, I see. Scott says, months ago I screwed up my Falcon to make it more sensitive, so my Falcon line is a lot wavier. I know we talked about Fridays before kind of being open mic Fridays and sharing some of the stuff that you guys are doing. We're going to have to do something like that. Okay, back now into the hard edge where we're going to anticipate some sort of reaction. Okay, Scott's sharing some of his secrets here. Scott says he does an 8-tick on the 8-tick Renko on the NASDAQ. He asks, E, what do you think of what I adjusted on the Falcon to make the line more wavy? You know what, folks? If it's working for you, then it's working for you. That's really the end game. What a lot of people make the mistake of doing is they fall into the rabbit hole of tweaking their system. They think that that is the objective. That's not the objective. The objective is to make money. I know you're sitting there going, duh, of course it is. But you'd be surprised how many people forget that. Years ago, Adam was working with a group of programmers, and they had a pretty sophisticated program trading the E-mini S&P. And most of the time, the program was profitable. But as the market is prone to do, it would do something the program couldn't anticipate or respond to quickly enough. So all of a sudden, it started incurring some losing trades. Rather than just say, well, that's trading, when those kinds of things happen, what can we do? Can we manage our money a little bit better? Should we adjust our profit targets? So on and so forth. No, they tore down the program, reprogrammed it for the new anomaly, and then went back to testing it again. Guess what? They're still testing, because you will never outprogram the markets. What a lot of people don't recognize, they think, oh, these huge banks, Citibank, Goldman Sachs, they have these super sophisticated trading programs that I'll never be able to get my hands on. That's why they're making the money I'm not. Do you know that they go through their programs in about a week or less, depending on market conditions? That's how quickly they burn through their programs. They got rooms full of professors and computer programs trying to crack the market with a computer program. That's why they've resorted to high frequency trading, trying to arbitrage via a computer. What used to only be done on the trading floor, where you would trade for what they used to call teenies. In the stock market, you could trade for a 16th of a tick. They would call those teenies. You would essentially take advantage of the difference between the bid and ask. That's what they're trying to duplicate with high frequency trading. And they can't do it on a consistent basis. Well, they can, but like I said, it's not just the one computer program. They end up tearing it down, they end up throwing it away and putting something else in its place that seems to be working better at the time. So don't get stuck thinking that you have to keep tweaking and adjusting and stuff. So if you've done something like Scott, if you've screwed up your Falcon and you've got a very wavy Falcon line and it seems to be working for you, then yeah, go with it. And you know what? I would love it if you wanted to share it with everyone. Like I said, maybe that's what we'll do on Fridays from now on, is we'll just take the time and we'll look at ways that you can maybe make your charts a little bit more responsive. We'll call it Rabbit Hole Friday. We'll just, satisfy everyone's curiosity. I will show you some things as well. I will introduce you to some tools and such that may help. You may find very helpful. Yeah, like Mark says, shiny new object / toy syndrome and overthinking. Simple support and resistance tells a lot, and there's a lot of truth to that. The reason support and resistance works as well as it does is that's how the market works. That's how price works. You think about it in real life. Why do people buy things on sale? Well, because you recognize that it's a good price. Why do people? Why is there all of a sudden, you know, a boom in the real estate market? Because sellers recognize that they can get a good price for their house, and there's lots of demand, so they start selling their houses. The stock market, the Nasdaq, the S&P, crude, gold, soybeans, it's all the same. It all works exactly the same. Okay, I'm getting some thumbs up on the Rabbit Hole Friday idea, so we're going to do that next Friday. We're going to start messing around with some software, and if I can convince anybody to share what they're doing, then we'll feature what other people are doing with their charts. Just a heads up, next week I may have to head out of town for a couple of days. I'm not sure what days those will be just yet. Right now it's kind of leaning toward a Tuesday, Wednesday, but it may be a Thursday, Friday. I'll keep you posted. Okay, right now we're still very, very flat overall. We got ourselves another little sideways trading range right here. And you know what? The market may just be happy to be trading here. This is, again, very close to where the overnight settled. Ray says, I can hardly wait for next week's Rabbit Hole Friday. Well, it might be a good way to go because you can see Fridays sometimes can be a bit of a dud. The move came early. For those of you able to take advantage of it, there was a good swing up, another good swing down, actually 3 very solid swings. We got ourselves a rule of 3 on the Eagle now, which is kind of leaning toward the short side. We'll see if I get a second push opportunity on this. What I'll do sometimes with this rule of 3 signal is I'll look to short below the first swing rather than on the signal itself. Okay, no, see, that's not what it's supposed to do, Ben. Doggone it. All right, well, I'll leave the trade in play because we're heading down here a little bit. Still fighting apparently a little bit of a glitch in the trade calculator. Ben's working on it. He said, make sure that your price is in sync with the bid ask. And I don't know how he expects me to do that. How can you follow all that? It seems to be in sync, but at any rate, it did not give me my stop. But we're short. And what I'll do is I can afford a couple extra dollars here because there's my risk amount. I'll slide it back just a little bit more. The better way, of course, to trade this is to wait for the breakout, then the retest. All right, let's see what we get. We've got the test of the extreme. We should try to at least retest the bottom end. We might even, well, that would kind of give us the top end of this trading range right here. Bring us back around that 6,900 zone, which seems to be very popular. Oh man, just painfully slow. All right, so here we go. I would have got filled on the break below that low right there. So I got my fill a little bit earlier on the rule of three. And where are we in relation to support and resistance? Okay, I'm going to swing for the fences on this one. I'm going to try to take it down here back to the median line. Actually, maybe I won't make it work that hard. I'll go on this side of the 68.90 zone. All right, you see these bars here with these wicks to their candles? I'm going to definitely use those to cover the trade. And if I were smart, I would be protecting more open profit at this point and not trying to recover my earlier loss. Oh, maybe I will try to take it down to the median line. The market's almost getting some giddy up. If I get a green bar, well, maybe I should bring my stops here now to the primary zone. Yeah, all right. Well, I got a little bit back on that one. And now the buyers stepping up again. So the back and forth continues. And way to go, Mark. Mark dipping his toe in the water one more time. He said, I hit my 17 tick target on another 4 cars. A nice finish. Well, I'm glad, Mark, you were profitable today. I may try to sneak in another trade before I head out of the office this morning, but yeah, not a very cooperative day for me today. All right, gang, have yourselves a very nice weekend, and I will talk to you again on Monday. If you're going to hang out, I think we could be due for one more bull push, and I'm not saying that because Scott said it. I'm saying it because the last couple of days have been relatively bullish, and I'm sure the market would like to finish around 7,000. I'm also relatively sure there's a whole lot of sellers parked at 7,000. So the closer they get, the harder the sellers are going to push back. It's just my 2 cents, but that seems to be the way it's shaping up. All right, everyone. I'll talk to you Monday. Bye for now.